Welcome to the Weekly Option, the podcast for people interested in trading stock options. Each week, we cover trade ideas and opportunities in the stock market right now. Whether you're a beginner, a professional, or just curious about options, this is the show for you. Let's get started. Welcome to the Weekly Option. This is episode 285 on August 25th, 2023. I'm your host, Eric, and in this week's show, we'll cover the trades from last week on Tilray Brands, the Direxion Daily S&P Biotech Bear 3X Shares ETF, and Suncor Energy. And we discussed three new trades on EOS Energy Enterprises, Citigroup, and Groupon. Now, it's always great to hear from listeners. If you have any questions about the trades presented here on the show or even about your own positions, feel free to email me. You can email questions to eric@theweeklyoption.com. That's ERIC@theweeklyoption.com. I've also created a few videos to teach you all the basics of option trading that you'll need to know to be able to follow along with me on this show. You can visit our website and click on the videos tab to watch them, or visit the YouTube channel for the Weekly Option. And for anyone that wants to learn how to trade options, I teach students how to trade options, not just study theory, with a combination of videos and live coaching calls. So if you're ready to take your trading to the next level, send me an email to schedule a phone call. Now, the equity markets managed to end the week fairly unchanged, with both major indexes finishing the week with less than a 1% change. The Dow Jones Industrial Average lost 153 points, closing at 32,346 points. The S&P 500 index gained 36 points, ending the week at 4,405 points. And now it's time for the topic of the week. The topic of the week is winning too small. One of the things I love is meeting other traders when I'm out and about. I can quickly tell if I'm dealing with a new trader or a seasoned trader by the stories they tell about their trading. New traders often lead with stories of big wins full of excitement. Old traders typically grunt about some issue they've had recently. I was that guy this week for sure. I traded a debit call spread on Monday. The company Nvidia had earnings on Wednesday. The stock price spiked up nearly 10%. I closed the trade on Thursday to lock in a 75% return on my capital. Sounds like a good trade, right? I was frustrated with myself for not trading bigger, putting on more spreads, or just finding a way to make more money on that trade. Even though it's a nice trade for a few days of risk, I really put the trade on too small. I won too small. It all seemed so clear in hindsight, given the momentum of the company over this past year. You guys have heard me mention that trading is all about risk management, not just making the most money. I also view trades that expose you to an earnings announcement as having extra risk. With that in mind, I did the right thing. I put on a small, manageable trade. Still, there's an adjustment to be made in my own thinking. I could have started off with the wider spread. I could have done multiple spreads or more than I did. Part of your trading journey is learning how to best size trades and manage the exposure of your overall position. Never go all in at once. You guys know that. But if you play too small, you'll stay small. We all have a Goldilocks position that's just right for your trading goals, your capital amount, and honestly, your mental sanity. So do your best to find that in any position, any trade that you put on, and find a way to celebrate the wins, because you're inevitably going to have some losses as well. So you want to make sure that when you get the wins, like 75% in 4 days, take the win, walk away with a smile, even if you feel like it was too small. So that's it for the topic of the week. Let's go ahead and get into the trade review from last week's trades from the show. We'll start off with the covered call on Tilray Brands. Symbol T as in Tango, L as in Lima, R as in Romeo, Y as in Yankee. At the time, the stock was trading for $2.64 per share. I looked at buying stock and selling the September 3 call at 15 cents, which can give you a return of 19.32% in 4 weeks. Well, Tilray Brands stock lost 30 cents, ending the week at $2.34 per share. The call option we sold lost 10 cents, leaving us with a net loss of 20 cents if we were to close the trade out immediately. Now, I would typically look to roll the strike of the call option lower, but the premium on the 2.5 call and just the economics of the overall trade make this a much less appealing option at the moment. We still are 3 weeks away from expiration, meaning this trade has a little bit of time left. I'll give it a little breathing room before deciding to roll the strike of the option we sold lower. The at-the-money call option for the month of October is priced at a level that would likely lead to a profit on this trade if we did need to keep the stock beyond September expiration. So I'm not opposed to keeping the stock and just looking to sell another option in October if this one expires out of the money. You don't have to freak out on these covered calls when the stock price is lower in general. If stock stays below the break-even price in the coming week or two, I'll reevaluate whether making an adjustment is the best decision or if there's another solution to manage this trade. Next up, we have the credit spread. We looked at the Direxion daily S&P Biotech Bear 3X Shares ETF. That's a lot. Symbol S as in Sierra, O as in Oscar, X as in X-ray, S as in Sierra. At the time, the stock was trading for $11.23 per share. I looked at selling the September 11-10 put spread at 35 cents, which could give us a maximum possible loss of 65 cents per spread. Now, shares of SOXS lost 50 cents, ending the week at $10.73 per share. The out-of-the-money put spread we sold is now at the money. We would incur a loss of 25 cents if we were to close this trade out immediately. Now, once again, there's no need to do that just yet because the stock price is still above the break-even price. This means that on stock price alone, we would still walk away with a profit if today was expiration. Now, I would lean away from making a quick adjustment on this one too. I like turning these credit spreads into iron condors by selling an upper strike call spread against it. I'm more interested in doing that when the premium we could collect for selling the call spread is more than the current prices being offered. Still, I'll be ready to make an adjustment in the coming weeks if price goes below the break-even price and the trade starts to look like it's going to lose money. So be ready to play defense on this one for sure. And then our final trade from last week was a debit spread on Suncor Energy, symbol S as in Sierra, U as in uniform. At the time, the stock was trading for $33.11 per share. I looked at buying the September 32-33 call spread for 63 cents, which could give us a maximum gain of 37 cents, or that's a 58.73% return in 4 weeks. Well, shares of Suncor Energy lost 19 cents, ending the week at $32.92 per share. The in-the-money spread that we bought is still in the money, although not 100%. The spread currently has an intrinsic value of 92 cents, and we paid 63 cents for the spread, which means if today was expiration, we'd still be locking in a 29 cent profit on this trade. We're still above the break-even price for this trade, so no adjustments are needed. We obviously are looking for the stock price to head higher in the coming weeks, and if it moves below the break-even point, we'll have some adjustments to make. That could mean flipping the spread and creating an iron condor. That could mean rolling it to another month or other strikes. Lots of decisions that we just don't have to make just yet. We are still very much in the money on this trade, so hopefully prices will go ahead and just edge higher in the coming weeks. So that's it for the trade review from last week. We do have some new trades this week. Of course, all the trades on this week's show will use the September 15th expiration for monthly options in September. So let's dive right on in. We're going to start off with the covered call on EOS Energy Enterprises, symbol E as in Echo, O as in Oscar, S as in Sierra, E as in Echo. The stock ended the week at $3.51 per share. I'm looking at buying that stock and selling the September 4 call at 75 cents. That could give us a return of 35.33% in 3 weeks. Now you enter this trade by buying stock for $3.51 and selling the September 4 call at 75 cents. This trade makes the most money if stock prices finish above $4 per share. The break-even price on this trade is $2.76 per share, and in real terms, the stock purchase would require $351, and you'll collect $75 for selling the option. Next up, we have a credit spread on Citigroup, symbol C as in Charlie. The stock ended the week at $41.24 per share. I'm looking at selling the September 41.5 42 call spread at 19 cents, which could give us a maximum possible loss of 31 cents in 3 weeks. Now you enter this trade by selling the September 41.5 call at 86 cents and concurrently buying the September 42 call for 67 cents. This is a credit spread because we're selling the spread, and this trade makes the most money if stock prices expire below $41.50 per share. The break-even price on this trade is $41.69 per share, and in real terms, you'll receive $19 per spread that you sell and have $31 at risk. And our final trade on the week is a debit spread on Groupon, symbol G as in golf, P as in Papa, R as in Romeo, N as in November. The stock ended the week at $12.99 per share. I'm looking at buying the September 12-13 call spread for 65 cents, which could give us a maximum gain of 35 cents, or that's a 53.85% return in 3 weeks. Now you enter this trade by buying the September 12 call for $2.05 and concurrently selling the September 13 call at $1.40. This is a debit spread because we are buying the spread, and this trade makes the most money if stock prices expire above $13 per share. The break-even price on this trade is $12.65 per share, and in real terms, you'll pay $65 to enter the spread, and your maximum gain is $35 per spread. So that's it for this week's show. I'm going to have a surprise for you guys coming in the month of November. I'm going to have a surprise for you guys coming in the month of September. Many of you have been looking for a better way to learn how to trade. Some of you are looking for more trading suggestions on a daily and weekly basis. Some of you guys are just looking to learn and want access to affordable trading. So I've got an idea, and I'm going to tell you guys about it next month. So if any of that sounds interesting to you, send me an email so that I can be sure and let you know when everything's ready. You can email me at eric@theweeklyoption.com, eric@theweeklyoption.com. So that's it. Thank you guys so much for listening. I hope you have an amazing weekend. And as always, happy trading. Thank you for listening to the Weekly Option Podcast. Please subscribe to our show and visit us at www.theweeklyoption.com. Disclaimer: there is a very high degree of risk involved in trading. The indicators and strategies described in this podcast are for educational purposes only and should not be construed as investment advice. For our full disclaimer, visit our website at www.theweeklyoption.com.